How do you get promoted from analyst to hedge fund portfolio manager? It's not easy. It's very, very competitive, and you have to be a little bit lucky as well. So as you can see, there's 5 analysts that report directly to Pam, and this is a typical structure, usually 5 analysts per portfolio manager. And so getting promoted to PM or portfolio manager is very, very difficult. And it actually takes some luck, because if Pam leaves the firm, you might get promoted. But then again, if she leaves, it might be because she lost a lot of money, in which case you might be partially blamed, or the whole team might be gone together. So your best bet is to hope that Pam gets promoted to Chief Information Officer or a more senior position within the firm. So it's not easy. Or if you have a really cool portfolio manager, and this is rare, but it happens, they can actually give you your own P&L, meaning your own profit and loss statement, and let you manage your own portfolio with them. Okay, I'm going to teach you some tricks, though, to help get you to the next level. So there can only be one. Only one person can make portfolio manager. It's not easy, not easy. And the stars have to really all be aligned for you to get to that position, okay? It's not easy at all. Let's discuss how you can make it. What do you need to do? And Pam actually is going to tell us how she got promoted, right? And step number 1, don't ever be emotional about stocks. Okay. When you're emotional, you tend to make mistakes and make the wrong trades. And I love this quote from Warren Buffett. He said that the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. That's incredibly prophetic. And so if you're really emotional about stocks, then you'll actually do the opposite of what you should be doing. Be unemotional. Okay. Next, always think in terms of risk reward if you want to get promoted. Think about how much upside the stock has to get to your target price, and also how much downside is there. I'll give you an example. If a stock is $10 right now, and the target price that you set is $15 for 50% upside, what's your downside? Well, say there's technical support at $9, and you can revisit the technical portion of this course to see what I mean by a technical analysis. So if you have $1 downside to $9 from 10, that's 10% downside, and 50% upside to a target price of $15. And so the risk reward is positive 40%, 50% minus 10. So always think in terms of a risk reward. It really helps you to assess and manage risk. Cut your losses and move on. When you make a mistake, and it will happen, a lot of this stuff is random. It's very stressful. But if you do make a mistake, or you lose money on a position and the market's right and you're wrong, which happens a lot, don't get emotional about it. Just cut your losses and move on. And remember, when you have a stop loss set, which we discussed in the technical section, respect it. Cut your losses and move on. However, I want you to be stubborn with a core position, okay? And build it slowly. Don't jump in right away, okay? I know it sounds counterintuitive here, but it's not. Buy a little bit of a position and hope it goes down a lot, so you can back up the truck and make it a whole position. And try to be stubborn and stay in that position forever, or until it hits your target price, or unless the technicals tell you otherwise. Understand portfolio management. Okay, if you're going to get promoted to portfolio manager, you have to be able to speak the language of portfolio management and understand how to effectively manage a portfolio. Okay, next up, it sounds silly, but it's true. Be a few minutes early for all meetings, especially if your boss's boss is in that meeting, okay? You're not going to get much exposure to Pam's boss, but it will be in the morning meeting. So always be there a couple minutes early, always. Be a team player and never be a shark. There's so many sharks in the finance business, and you just got to watch your back. Never be a shark. And I want you to be long-term greedy always. Be very long-term focused, okay? And I hate this one. I coined this term. It's called FILO, which means first in and last out. Face time matters early on in your career. Later on in your career, you don't have to worry about that, or politics as much. But I got to be honest with you, it matters early on. You also want to cross-sell ideas or helpful data points. You want to share those with other analysts or other portfolio managers. Say you're focused on the technology sector and you're in Best Buy and you're kind of just doing some research on what the cool new PCs or Macs are, whatever, or software products. If you see that the Best Buy is really crowded and it never is, Go to the retail portfolio manager, meaning the portfolio manager or analyst that covers the retail sector, and tell her or him that, hey, I was in Best Buy and it was crowded. So be a team player, cross-sell ideas. Next up, you want to be able to comment quickly and briefly on all stock-related news that's relevant. Okay, so after hours, if one of your companies negatively pre-announces, meaning they issue a press release saying that numbers are going to be worse than expected, get ready to quickly comment on that. Always be mindful and ready, because your boss and your boss's boss will count on you to update them and give them the bottom line. So what? I want you to ask yourself those two words after every single thing you do. So what? Okay, so I know it sounds silly, but for every email you're about to send, I want you to ask yourself, so what? Is this really worth sending? And I also want you to think that every single word in an email costs you $100 to write. It'll make you more brief. Understand that 2 or 3 positions really make a year. Okay, the best portfolio managers make most of their money on 2 or 3 core positions. So get to know a couple of positions incredibly well. Don't cover too many stocks. If you spread yourself too thin, you'll never make money on those 2 or 3 core positions. Don't go over your boss's head. Don't talk to Pam's boss unless, and this is risky, but it's survival of the fittest sometimes. So I want to be open and transparent with you in this course, unless Pam's out of town. And then what you do is you go to the morning meeting, and if whoever is conducting the morning meeting, usually Pam's boss, notices something is going on in your sector, be ready to talk about it and be aggressive and proactive as well, because you're not going to get much exposure to your boss's boss. And that's one of those prime opportunities when Pam is out of the office. I'm not saying backstabber at all. I'm just trying to make you mindful of your own career, especially when she's away on vacation. Okay. Your compensation is a DCF. What does that mean? Well, a lot of the money you're going to make is not in the first year or 2 or even 3. Sometimes it's a massive bonus you'll make in year 5, 7, or 10. So be long-term greedy, okay? And always be mindful of that. Be long-term greedy. Don't be in too much of a rush to get promoted, because careful what you ask for. If you're not ready to be portfolio manager and it's given to you, you'll basically be given enough rope to hang yourself, okay? So just be long-term greedy. Realize you might be swimming with the sharks, okay? There are a lot of sharks in finance, okay? I've generally been lucky because I work with a lot of very nice people, but just be mindful of sharks and keep your cards close to your chest. Don't ever repeat something that you want them to repeat to other people. Treat everybody equally. It's very important, not just your boss's boss, but your colleagues as well, or the traders, or the assistants. The assistants, it's incredibly important to treat them well, because they know how the game works. They know how the politics work. They know when their boss is in a good mood or a bad mood or wants to promote somebody or whatever it is. They have insight. Treat them well. Okay, exactly. The assistants know exactly how the game works, so get to know them. And I really hate this one, but you have to remind people of your successes. Remember in the previous video, Sally, the sell side analyst, reminded everybody she had a buy rating on Oh I Get It when it went up a lot. You got to remind people of your successes in life. Otherwise, unfortunately, they'll just never know them, and they'll think that you're only as good as your last game. Okay, especially around bonus season. Especially around bonus season in October, November, December, before your bonus is given you, you got to tell people what your accomplishments are. And you know what? You will never get a raise or a promotion in life unless you ask for it. Investment ideas and themes last much longer than you think. This has always been the case and always will be. Okay, so remember we looked at top down, steps 1 to 3. A lot of times those themes can last a lot longer than you think. Okay. Also, never invest in a B management team, meaning not an A management team. Never invest in a B management team. But I've learned the hard way from investing in, really, really low quality management teams because I thought the stock was cheap or the business model was good. Doesn't matter. Ideas are commodities, execution is not. Invest only in A management teams. And in technology, never buy a tech stock if the founder is no longer there, okay? It turns into a big bureaucratic entity. In fact, those are my favorite shorts when the founder leaves. Be passionate. Feel that idea in your heart. Okay? Feel it right in your heart. And if you get excited about an idea, then that's one to do a lot of due diligence on. And you'll know what I mean when you are in that position. If an idea doesn't excite you, then don't pursue it. Admit when you are wrong and what did you learn? Okay, maybe have a logbook if you want. It's up to you. Just admit when you're wrong. What did you learn about this? Why will you never, ever make that mistake again? And I've worked for people in the past, I won't say at what firms, where those people shouldn't have been managing people. And I learned just as much on what not to do as I learned on what to do from working for certain people. So just keep learning. Treat the sell side with respect at all times, okay? What happens usually is a lot of times the buy side will be very short with the sell side and treat them poorly on the phone or in person even. Just treat them with respect. Life is too short and it's just bad karma otherwise. Take your breaks and take a lot of them. Hedge funds can be extraordinarily stressful, okay? Maybe have a policy in your house of screen-free Sundays where you and your kids and your family, can't use screens, spend time with family. Take your breaks because you can burn out quite quickly in this industry because it is very stressful. Don't chase long ideas with only 10 or 20% upside. I've made this mistake before. Try your best to invest in ideas that have 30, 40, 50% upside or way even more than that. And that way it won't derail you from the investment thesis at all. So that you can be a pit bull on a pork chop, so to speak. Okay. Know the difference between a broken stock and a broken company. Okay. I love investing on the long side in broken stocks, especially when they're not broken companies. Know the difference. Okay. Be greedy when others are fearful and fearful when others are greedy. That's vice versa at the end there. And this is another great quote from Warren Buffett. Just be contrarian. I mean, if you think about it, if you buy a stock that everyone else loves, you're probably not going to make as much money on it and vice versa. Okay. So that's why when we looked at technicals, we looked at the relative strength index. You always want to buy stocks that are, for the most part, oversold if you can, and vice versa. Because when a stock is oversold from an RSI or relative strength index perspective, it basically means that not that many people are left to sell the stock in the near term. Ask yourself the 5-year question often. And what Pam means by this is that when you look at long or short ideas, ask yourself a question before doing due diligence on the company, which is this. In 5 years, is this company going to be more relevant or less relevant than it is today? Is Yahoo going to be more relevant or less relevant in 5 years? Are you going to search using Yahoo or Google? That sort of thing. Use common sense. It works. Only look at technicals after you've looked at fundamentals, valuation, and catalysts, okay? And again, technicals are just for you to understand where to get in a position, where to take a little bit of profit, or where to draw the line for a stop loss. And make sure your boss, meaning your portfolio manager, respects technicals. If not, don't ever bring them up. I know that if you work at a tiger cub firm or a firm that's a fundamental focused hedge fund like a Tiger was or a Viking or whatever those great firms are, they don't really focus as much on technicals. It's more on fundamentals because they're long-term focused, and that's why they're still in business. Okay, if you don't know the answer to something, say, I don't know, but I'll find out. Okay, and it makes you look proactive, aggressive, ethical, and all that good stuff. And then get back to your boss or the other portfolio manager or the other analyst. Service them as well. Okay. I don't know, but I'll find out. Okay. Less is more. So when you type your emails again, just do a couple quick words. Pam, Franklin increased guidance at, oh, I get it, buy the stock. That sort of thing. Less is more. Don't waste time. This is a bad lesson I learned years ago. I was at Goldman, I think, or another hedge fund. And you never talk to a trader at 9:29 a.m. New York time, obviously because the market opens at 9:30. And they're stressed out, rightly so, because they've got a lot of work to do at the open, right? They got to jam a lot of orders in. And I've made this mistake too. Never talk to a trader at 3:59 p.m. New York time because the market closes at 4 p.m., okay? You'll really stress them out because they're trying to finish up orders before the day is done. And if a trader yells at you, and it'll probably happen, don't take it personally. Okay, it is what it is. They're very stressed. Okay, never judge a man or a woman until you walk a mile in their shoes. Okay, they're stressed. Okay, and just have thick skin. I remember when I went down to New York on Wall Street and I worked at Goldman. I was pretty sensitive. Just deal with it. Okay, don't worry. Have thick skin. And again, learn what not to do. You're going to work with other analysts also that are not great stock pickers. So just learn what not to do. Watch them, observe them, learn from their mistakes too. So also, I don't want you to check stock quotes ever during the day. It's so tempting. It is so tempting. But I guess the great analogy is this. Let's say you don't have time to watch a baseball game or a sporting event, which takes 3 hours. You can always read the box score, right? To see who got hits or who got a goal or whatever it was later. Don't waste all 3 hours, okay? Your time is precious. And while the stock market's open, I know it's tempting to watch the tape. Believe me, watching quotes is not going to help them go up or down. There's no Jedi mind trick that works with hedge funds. Just don't check quotes, okay? Focus on research. Everything you do during the day that is not focused on making money for the portfolio or coming up with new cool ideas is a waste of time. Checking stock quotes is a waste of time. That's why you have traders. They'll tell you if something blows up, okay? Set up Google Alerts. So Google's got this cool feature in Google that allows you to have emails sent to you immediately if there is news on any particular stock. Check it out. Use it often. And enjoy the job. I mean, it's a blessing to get a job in that industry. Don't get bogged down in the weeds. Just remember how happy you were that the first day you got hired and you got the job. Just have fun with it too, man. You're getting paid to learn. It's a blast. At conferences, right? Remember Sally had that sell side conference? Get to know your competition, okay? Get to know them. It's good to have a lot of friends in the industry too. But watch out for groupthink. If a lot of people start liking an idea, then I don't want you to. I want you to do the opposite, right? Or be your own person. Do your own research always. Always do your own research. Don't rely on anybody else, okay? Okay. And remember that a sell-off can be a great buying opportunity, okay? Be contrarian. Remember what Warren Buffett said, if the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. So be a contrarian. Watch out for a threatened portfolio manager, okay? Get out of their way. And you'll know what I mean when you're in that situation. If they feel threatened by you because you're too good, which sucks because you're just doing your job well, just try to avoid contact with them. Keep your head down, work hard. It's survival of the fittest. If your PM treats you poorly when they're out of the office, make sure you get exposure to their boss, okay? I know that sounds harsh. Just thinking of the best outcome for you. Survival of the fittest, watch your back at all points in time. And I don't think people are mean-spirited in the hedge fund industry, but there's just a lot of pressure, and people can have kind of short tempers too. So just kind of watch your back. It really is a survival of the fittest mentality a lot of the time, okay? I'm giving you every mistake I've made in my life, okay, in the hedge fund business, and my successes too, but my mistakes. I think you can learn more from my mistakes. Don't check the futures before you go to bed, ever. Why? You won't be able to sleep. You'll be too excited, maybe, right? Or too worried. Just don't do it. Don't check the Nikkei futures or the S&P futures or whatever it is. It's out of your control. Don't focus on that. Never pitch another portfolio manager or analyst stock, right? Never trade a position that another portfolio manager or analyst has. Watch out. It gets very territorial. If you're supposed to trade the software and internet sector, which I did for years, then focus on Google and Microsoft and all that software and internet companies. Don't go trading Ford, obviously. Don't go trading Intel. This is a chip company, right? People are very territorial. It's not worth it. Even if you think you can make a lot of money, it's just a bad idea. Don't do it.